So this is a very basic or a very introductory webinar around the R&D tax incentive. So if you've attended one of our webinars before, probably a lot of this you'll already know, but it's really designed for first timers who need some more information about the R&D tax incentive. And this is the kind of last chance for the FY23 to get your R&D tax claim sorted. So as always, the information that we present today should not be used as specific legal advice. Always speak to your tax accountant, R&D consultant, lawyer, etc. before proceeding with any claims, that kind of thing. So for those of you who don't know me, I am Jack. I'm the R&D tax manager here at Fullstack. Fullstack is a chartered accounting firm that's been around since 2017, and I head up the R&D tax and grants team. And the purpose of our team is to provide our clients with very holistic approaches around federal and state government grants and incentives for developing and commercializing new technologies. So that's some of the things that we do in the R&D department. So on the agenda today is just really the basics around the R&D tax incentive and the eligibility. I'll talk a little bit about the compliance and record keeping requirements, and then just briefly touch on R&D finance. So basics and eligibility, just to note as well, there is an upcoming deadline for submission of the R&D application form for the year ended 30th of June 2023. So you have up until 10 months after the end of the financial year, which happens to be the 30th of April 2024. So if you have not yet submitted your 2023 claim, then please, following this, get in touch as soon as possible. So the R&D tax incentive is the federal government's broad-based scheme to incentivize experimental R&D activities being conducted in Australia. In multiple iterations, it's been fueling innovation for quite a while, previously in the R&D tax concession. And the great thing about it is it's a yearly process that goes through the tax return. It's broad-based and entitlement. So there are some hoops to go through, but they're not as extreme or as complicated as some of the other grant programs. It's just always the one trickling along in the background that just provides that early additional startup funding. And R&D tax incentive is a crucial part of that funding cycle. So these next two slides are a bit of a timeline in terms of the steps that you need to do to secure those R&D tax offsets. So to prepare the application, you must lodge that, as I said, before the 30th of April. So 10 months after the end of the financial year. That requires you to determine the eligibility of your technical activities and register those accordingly. Following that, you will be provided with a letter from Industry with a registration number that goes in the R&D tax schedule, which is included as part of the company tax return. And once that is lodged, that will be processed, and any tax refund or adjustment to the tax position will flow through that process. So it's a yearly process. It is self-assessment. So what that means is if you follow this process, you will, in 99% of cases, receive a R&D tax offset. So either a refund or adjustment to the tax position. What that does not mean is that your R&D has been approved by the government, that anyone from the ATO or Industry has validated that you are claiming correctly. At that point, it is self-assessed. So the Industry or the ATO can audit you or review you up until 4 years after you've made a claim. And that's the point in time that you would have to provide additional substantiation. And if you are not able to do so, or not able to provide substantiation for the claims that you've made, then you may have to pay back funds that have been previously received. So it's just a little bit of confusion sometimes around what exactly is the process, and does that constitute approval or something else? And no, it's not approval of your R&D necessarily. The rates mentioned in this presentation are for companies that are eligible for the refundable R&D tax offset. So that is where your aggregated turnover is less than $20 million in the financial year. Aggregated turnover is the turnover of the company plus the turnover of any affiliate or connected entities. But for most startups that are in simple structures, simple company groups, you'd be looking at the 43.5% refundable tax offset. So The offset will always be the same, 43.5%, but how that is delivered will depend on your overall profit or loss position for the year. So on that table at the bottom, you can see at the profitable end, your tax payable is reduced. So you may not get any refund, but your tax payable would be reduced by the R&D premium there of 18.5%. On the other end of the scale, if you have sufficient losses to fully absorb the add back of the R&D expenditure, you would get back the full 43.5% as a cash refund. And somewhere in between, you might reduce your tax payable to zero and then get a portion of the 43.5% refunded. It does use up your tax losses, so keep that in mind, but you do get a premium, so you're always getting an 18.5% net benefit. And then for those that receive the refund component, will have a timing benefit equivalent to the company tax rate. So in terms of the activities that can be claimed, we have a definition in our legislation around a core R&D activity, and you need at least one core R&D activity being conducted or to be conducted. You may have multiple, they may start and stop or change over time, carry over multiple years. That's all fine. It's just about looking at the activities you've conducted in the financial year and assessing whether you've conducted a core R&D activity. So a core R&D activity is an experimental activity that is to do with research and development in a particular area of established science. So you need to define or identify the particular area of science that you're working in. R&D tax incentive is not one-to-one with how people often refer to R&D in business or commercial settings. It is narrower. It's more involved in technical, scientific experimentation rather than trying to resolve commercial or business uncertainties or risks. So experimental activities in an area of established science, you must conduct a systematic progression of work. So from a hypothesis through experimental steps, evaluations, drawing logical results and conclusions based on those observations. A core activity will be one that is conducted for the purpose of generating new knowledge. So that can be in the form of new or improved product, process, service, material, device, etc. And importantly, all of these are important, but in particular, this last is one to really drill down. So a core activity has an outcome that could not be known or determined in advance on the basis of current knowledge, information, or experience. So what that is asking is, what would a competent professional in the particular research field that you're working in be able to achieve without having to go through a systematic progression of work? So if they're conducting business as usual activities or applying knowledge that already exists, whether held internally or publicly available information, if they were just applying that knowledge in a way that was standard, then it likely wouldn't have that. You likely wouldn't be able to prove that the outcome was not able to be known. So it's all about defining those hypotheses, conducting those experiments, building a prototype often, whether it's a physical or software based, and testing that. So like I said, the R&D tax incentive has a very different perspective of R&D as compared to a commercial or a business perspective of R&D. Often when you speak to especially kind of product level people or founders, they talk about R&D as everything that we need to do to develop this new product or service. The R&D takes a narrow view on that. And there's a little bit of a contrast there. Some further eligibility criteria: you can only claim activities conducted in Australia. So that is where a person generally will be physically sitting in Australia, or sitting or standing, doing whatever activity is part of the project. Any overseas activities are not eligible unless you have an overseas finding. We have a previous webinar that we recorded available on our YouTube channel that goes into some more detail about that. But in 95+% of cases, you're just looking at Australian based activities. You need to spend at least $20,000 in a financial year to be able to claim. If you are using a research service provider that is on the RSP list, that $20,000 minimum does not apply. But again, for most companies, you'll have to spend at least $20,000. You can only claim activities conducted on behalf of the company or the claiming entity. So if you are doing something under a contract with someone else, then they would likely be the claimant rather than yourself. However, if you're engaging third parties to do work on your behalf, then you'd likely be able to claim those. So that's all about who owns the IP, who pays for the activities, who bears the financial burden or risk of conducting those activities, and who controls those activities. The R&D tax incentives are only available for companies, so you do need a company structure set up. And depending on the nature of that structure and that previous requirement around activities conducted on behalf of the company, you just need to be sure that you pick the correct company within a structure potentially. So if it's a consolidated group, it would be the head entity. You may have a holding company and an IP company and an operating company. In that case, you will just have to do a little bit of work to make sure that the IP is held in the company and that in the correct entity, and that entity is also ultimately bearing the financial risk for conducting those activities. I mentioned a few times before that expenditure risk provision will prevent you from claiming expenditure if you, at the time you conducted the activity, had some level of certainty that you were going to be reimbursed or paid as a result of that activity. So in terms of the expenditure, so once you've defined your activities, registered them accordingly, in the R&D tax schedule, you claim that expenditure. You can generally claim most types of expenditure that was incurred directly on those R&D activities. And the main ones there are contractors, salary and wages, the decline in value or the cost of assets purchased for use in the R&D activities, and any other directly related expenses. So subscriptions are often for activities that have software related materials, consumables, etc. If it's developing physical prototypes or testing formulations of products, those kinds of things. Some travel and potentially some overheads, rent, electricity relating to the premises that were used in conducting those R&D activities. There are some excluded. So this is not exhaustive. This presentation, as I mentioned, is just a little bit of an intro, an effort to speed up the presentation. There are other categories and other requirements and things like that we don't touch on that are more applicable in niche situations. So you should always make sure you ask your R&D consultant, and they'll kind of guide you through everything that you need. So the other one really important thing to understand is payments to associates. A little bit late now for the FY23 year, but if you are looking at a current financial year claim, then any amounts that you've incurred to associates, so founders, major shareholders, etc., people that can control how the company operates, any payments to associates must be made prior to the end of the financial year if you want to claim those. That's just an integrity requirement to prevent a few kind of situations where people try and roll the program. There are also some activities that are excluded from being core R&D activities, probably half or 40% of that long list. These are the most generally applicable. So market research, market testing, market development is excluded from being a core R&D activity. Research in the social sciences, arts, or humanities, licensing activities, developing computer software for internal administration purposes only by either the claimant or the claimant and their associates. So just a few things to look out for. These activities are excluded from being core R&D activities, but they could be included as supporting R&D activities where they are directly related to a core R&D activity. So once you've defined your core R&D activities, you can also include supporting R&D activities. Those are activities that are not core because they don't meet the criteria, but are nonetheless required to support a core R&D activity. So a bit of an example on this slide, the development of new gut microbiome analysis could be your project, so the development of that new service at a high level, and that could include core R&D activities and supporting activities. So the core R&D activities are some software there, the machine learning model, some hardware development, and then clinical trials. So it can be quite broad in terms of the different kinds of activities that are able to be claimed, and the supporting activities, things like background research, project management, administration, data collection, so activities that are non-experimental themselves, and maybe the production of the bacteria for use in the clinical trials. So that's where the scoping comes in and is important. At a business level or product level, you probably have a project to develop your new product. That will include potentially eligible R&D activities, either core or supporting, but also potentially ineligible activities. So things that are important from a broader product perspective and making sales, but are not specifically required to resolve one or more technical or scientific hypotheses. So if you're developing some software, for example, taking that from an R&D prototype through to something that people are able to interact with and you generate revenue off, may include the integration to a payments engine. While that's important from a product perspective, it probably isn't potentially not directly related to that resolution of those hypotheses and those uncertainties. So just a little bit about tax compliance. So as I mentioned, the R&D taxes self-assessment program. On the way through, the application form is a fairly high-level summary of the activities that you've conducted in the year. But at the point of receiving your refund, you would likely not have had to provide any underlying scientific or technical records or invoices, timesheets, that kind of thing. That would come into play likely after you've made the claim and spent the money. If the ATO or the Oz industry come knocking and asking you for more evidence. So if you do get selected for audit or review activity, you would need to demonstrate that reasonable methods have been used to identify and self-assess those activities and differentiate between expenditures on R&D and non-R&D activities. So they are two fairly separate types of record keeping and evidence that you need to keep. There's the activity-based record keeping to substantiate that your R&D activity, the activities you've claimed are eligible R&D activities from a technical perspective. And then there's the expenditure based record keeping that once you've defined those activities, well, how much did they cost? So being able to reliably determine what the actual cost of those activities were. So timesheets, for example, is probably the most important thing on that list. So we have something that we call contemporaneous documentation. So documentation that was prepared at the time or shortly after those activities were conducted and the expenditure was incurred. And so keeping contemporaneous documentation is always preferable to trying to cobble together documentation after the fact. And that can be especially difficult if you are audited or reviewed with potentially quite strict timelines. It's always better to have evidence on hand rather than trying to explain yourself kind of after the fact. So a few things to consider. I think I've probably covered most of these things. So when your registration letter has come back and a refund has been received, that is not approval as such from Oz Industry or the ATO. It's just an acknowledgement that you followed the administrative process. So keep that in mind about potential review or audit. That's especially important it's important to assess your activities on a yearly basis. So really looking at what's been done in the particular year and describing them as such rather than just kind of lazily continuing R&D activities forever. There is a point where your R&D will be finished, your stage 1 prototype, let's say, or prototype version 1. So version 2, version 3, you need to look at those in isolation and determine whether there's core R&D activities being conducted there. And that obviously is easier if you have that real-time tracking and that generation of contemporaneous documentation. Just always touch on R&D Finance is a useful product for anyone who is claiming R&D. I won't go through this in too much detail because really our focus at the moment is getting claims in for FY23. So you won't be able to get any finance for that, but maybe moving forward, that's something to consider. Essentially what this is finance providers will, if you're working with a qualified approved R&D tax consultant such as ourselves, you can access for R&D refunds sooner. So this works well if you have only a set pool of funding, but if you could, you would spend more. Basically allows you to bring forward some of that R&D tax offset, the cash flow that you receive from that, and spend it within the year to boost your claim at the end of the year. And generally that uplift in the R&D expenditure and the R&D tax offset is enough to pay back the finance costs and any interest and things like that. So just something else to keep in mind. There are a number of considerations that you need to make sure that your R&D consultant has contemplated, just in terms of any unexpected amounts of accessible income, making sure that you are going to receive those refunds, making sure that associates have been properly paid, and considering any clawback. So if you've received government grants or things like that, then your refund may not be as large as expected. So that's it for today on the R&D side. As I mentioned, Fullstack, we're a chartered accounting firm specializing in tech, those kinds of areas. Our whole mission is to help you in those early stages. We can assist you with that and improve your cash flow and planning. If you have any other requirements beyond the R&D tax and grant space, please feel free to reach out. If you are considering claiming for FY23, as a reminder, the deadline for submission of the application form is the end of this month, 30th of April. So if you're still unsure whether or not you would qualify or have any other questions, please feel free to let us know as soon as possible. There will be a point where it's probably too late, sooner the better. And we're available through a variety of ways that you can contact us. So please feel free to reach out. Yeah, so just our services around the R&D tax incentive are I generally speak about helping you reduce 3 levels of risk. Number 1 is the risk of claiming something that you're not eligible. So we assist you with that early kind of scoping, identification of those R&D activities. The second risk that we reduce is the risk of you being audited or reviewed. And primarily we do that through helping you with the R&D application form, making sure that you're describing your activities in a way that is compliant with the legislation, that it's easy to understand for an assessor. If they ever do pick up your form and decide whether they need to ask you some further questions, they can just read through and get through your application that you are conducting eligible R&D. So yes, we do assist with the application. That's kind of the major area that we assist our clients with, and the technical write-up there, the financial side as well, obviously. And then the third level of the risk that we try and mitigate as much as possible is the risk that if you are reviewed or audited, then you'll be able to provide the authorities with contemporaneous documentation, substantiation. So you kind of move through those processes with the least amount of hassle as possible. So it's not too late to prepare now. So for the submission of the R&D application form, as I said, you don't have to provide any underlying records, documentation, etc. It is more a summary of what you've done in the year. So you could theoretically do that, start preparing that on the 30th of April. Obviously, we won't advocate that. There is still time to claim. However, if, let's say, you have no records to substantiate your claim, then you just would need to understand and assess the risk of, well, there is a non-zero chance that you would get reviewed at some point. So you just need to keep in mind that if you don't have any records at the moment and you did get hit with an audit or review, then you would likely fail and have to pay back the funds previously received. Yeah, so, and as I mentioned, so receiving a refund or adjustment to the tax position, so going through that process and being quote unquote successful, that is not approval from the ATO or Oz industry that you've conducted eligible R&D or incurred eligible R&D expenses. So that is not approval. There's no one from the government saying, yes, you have claimed correctly. So it is an administrative process whereby you register activities and claim those. But like your personal tax, like your company tax, even if you have got a refund, then they would always reserve the right to audit or review you at a later time. And that's when you would have to provide additional substantiation. There is a process. You can get a finding from the ATO saying, yes, these activities that you've presented to us are eligible, but that is much longer and lengthier and expensive process, and only applicable for less than 1%, probably, or less than 5% of the companies. And just finally, how long does the registration number take to come back? In non-peak periods, I will often get registration numbers back within 24 hours. At the moment, it is peak period, so it is taking a little bit longer. So it could even potentially blow out to a month or more. So yeah, 2 weeks is generally a kind of ballpark. All right, well, that is all we have time for. So again, thank you everyone for attending. And if you do have any questions, please feel free to reach out through any of those channels. Always happy to chat through anything, answer any questions. So thank you everyone again.